Hello, gents. And yes, golf is back. So that is me last September in Bali. Beautiful golf course overlooking the ocean there. Quite a challenging course. Very hot and humid. So, playing golf this weekend. Fantastic news. Right, let's get on with 8.2. So you guys hopefully followed the process yesterday and the things we need to look for. So in terms of 8.2, you get your accounting records, cash receipts, cash payments journal, and you get the bank statement. And as we've already determined, what we need to work out is why does that figure differ to the figure that I would get down here if I took in the opening balance plus receipts less payments. So you know the process. There are things that in here in the bank statement that we don't have, and that's why we have these lines here. We need to add them in. And in the last class, we identified those pretty quickly, but we'll go through and tick them off to confirm. And then you have items in here, in your receipts and payments, which the bank doesn't know about yet because the deposit, usually the last one of the month, hasn't been banked yet. And some of these checks that we've sent out to customers have not yet been presented. So that will form the basis of this section here. So what the business doesn't know about, we adjust our accounting records. And what the bank doesn't know about, we just simply put it into this bank reconciliation statement. And so once we finish, we get that figure there equaling that figure there. And that's what's called reconcile. So let's go through that process. So what we have is the statement of receipts and payments for last month. So there's your balance at the 28th of February, 1250, which usually agrees with the one up here, 1250. So that's our opening balance. So we know where to get that from now. Right? So the 12500. So you get that from your last month's cash book statement, and that goes in at the start of this month. Right? Whereas the bank reconciliation at the end of the month goes in here at the end of the month. Right? Now that is very important because a lot of students grab the wrong balance. Right? So in here, some students often grab that one, right, the one at the start, rather than the one at the end. So it's always the one at the end in your bank statement. Whereas the one in your accounting records, the opening balance, is the one from the previous month. Right? So that's basically our opening balance. That's the February 28 balance, which therefore becomes the 1st of March balance. Right? So don't get those balances mixed up. One is the end of the month for the current month, bank statement, reconciliation. One is the end of the balance from the previous month, which becomes your opening balance in your accounting records. Okay. Let's go ahead now and do what we usually do, which we mark off the receipts first. So don't forget that the credits, the credit column, is the same thing as our cash receipts. So this is the bank account going up, whereas the debit column is the bank account going down. Right, so we're doing receipts first. So we're looking for a 990 receipt. Did I bank 990? Yes, I did. There it is there, and we cross it off. We then go down to 462, and you go, well, it's not there. And the tendency would be to circle those and say, well, they haven't appeared on the bank statement. But you've got to be careful when there's two banked on the one day. So add them together and see whether it equals 462. 275 plus 187. Yes, that is 462. So we can cross both of those off. They are reconciled. 550. So that's the one I spoke to you about yesterday. Right? So we know that's going to be dishonoured, but at the moment it's been recorded in our records and it's been banked. So we cross it off. 308. Straightforward. 308. $2,000 capital contribution. Has that made it there? Yes, it has. It's always pleasing when a big amount of money makes it to the bank. And we're done. Which means that that has not been ticked off, so we don't know about it. if we don't know about it, then we have to add it into here. Right? And the item will be interest. Right? So we type in interest, bank statement, the amount, and put it under the appropriate column, which is sundries. All right, then we go over to the items over here, and we have one item. Obviously not the 25 because we've just done that. That's to do with the bank. We have one item which doesn't appear in here on our records. So that is your deposit not yet credited. DNC is what you write so you don't forget. That then is written down in the bank reconciliation statement. So it's a deposit. That will make your bank account, because it's a credit, right? So that means surplus, go up. So that will increase. So currently 3370 is a surplus, or if you like, a current asset. So therefore the deposit not yet credited, when it is credited, will increase the bank account. Right? So we add the $165. And that's my running bank balance at this stage. All right, so what we've done is pick up the item that the bank didn't know about, which is the deposit not yet credited. And we've picked up the credit, which we didn't know about, which is the interest. We've now added that in. Right, we now go and do the debits, those that decrease the bank account. Again, we've got a bit better reference here, so we can look for the document numbers down in the details and particulars to make sure we match it up. So first one is document 340, right, for $165. So it's a check, obviously. So it's not there. There it is there, right, all the way down, check number 340. So notice we wrote it on the 1st of March, but it took all the way until the 20th of March before the people we gave the check to finally banked it. That's why we often get unpresented checks. Now, wages is very unlikely to be unpresented because usually when you pay the wages, it's in a cash check. So $300 and $300. And that was online, so it's going to come straight out. Drawings is an online transfer, so that will come straight out. Wages, $120. Well, that's very odd. It's a check for wages for $120 and hasn't been banked because I can't see check number 341 anywhere. Right? So that is not appearing, so we put a circle around it. Right? And we write unpresented check. So someone we've paid wages to for some reason hasn't banked it. They must have a lot of money. All right, then we have EFT 269. 275, there it is. Bingo. It is a bit like playing bingo. Drawings 360, online transfer. Bang, there it goes. 180 in wages. See, it's better to get paid directly into your account because then you get the money. And rent 220. Check number 347. No appearance, Your Worship. There is no 347 there, so we circle it. And that will be a UP. Right, so what you're starting to see is the deposit not yet credited will only appear in your receipts, and all your unpresented checks will only appear in the payments. You'll have nothing circled in the receipts other than a deposit not yet credited. And you'll have nothing circled in your cash payments journal other than an unpresented check. We've also identified that there are two items that we didn't know about until the bank statement arrived, the 550 and the 10. Right, so the 10 is bank charges, so let's go and add that down to the bank charges. We can put the end of month date there for that one. Bank charges, bank statement, $10 in the sundries column. Right, we're done with the payments. The 550, as I said, is a dishonoured check. So it means that this person up here, A. Macari, has got no money in their bank account. So because the bank is going to take it off us, what we want to do is cancel that entry. So we're just going to do the exact opposite by putting in minuses. So here we will write dishonoured check. And we could write McCurry, but it's going to be obvious that it's him up there, but we'll put it there anyway. Right, and bank statement. But remember, because it's dishonoured, we're cancelling. So this has to be minus 550. Right, you'll notice there the 500 under mowing fees. So we need to reduce our fees if we were going to do an accounting report. And we don't owe the government the money anymore, right, for the GST, because we're not going to get it. So we put all those in as minuses. So the 500 negative matches the 550. Right. So we've done everything there to adjust our accounting records. We've circled everything. I've already put down the deposit not yet credited. So now we need to include the two other things the bank didn't know about, which are our unpresented checks. So we plonk those in and put in the check numbers, number 341 and number 347. So we have 120 and we have 220. Right, we add those two together and we subtract that from the 3535. So this will give me the correct bank balance. Right, so I know that 3195 surplus or current asset is what the bank balance actually is. Right, we want to prove that down here. I want 3195 down here. So what we need to do is put in our cash receipts. So we need to go back up and remember that we've made two changes. So we add up everything in that column, including the circled items. And don't forget that was a minus. So we get 3950 as my receipts. We add those two figures together, 5200, and then we do the same thing for the payments. We add everything up, including the circled items. 2005, we put that in. Don't forget that's a negative. You can just do less or as a negative, it doesn't really matter. And then we add those two numbers together, and the closing balance is 3195. Bingo. All right, so we've got 3195 in both places. That is a reconciliation. So both parties agree. Right, so just going over that again. The process is to identify what is on the bank statement that we don't know about. So any items that you have not crossed off, you circle them and you add them to your accounting records. The new one here was the dishonoured check, which is treated as a cancellation of a previous deposit. So it's minus all the way through. And then you go over to your accounting records, and anything that you have circled here, because it doesn't appear on the bank statement, means that the bank doesn't know about it yet. Right? The only two things that the bank won't know about are deposits not yet credited, right, and unpresented checks. You can never have anything else in here apart from those two items. Right, so always remember that. And then everything agrees. So that is a reconciliation and now guarantees that our accounting records are accurate. So very important to know that. Right, so that is exercise 8.2 as a video.